This stock is being completely ignored right now, and I think that's a mistake. It doesn't trend on Twitter, nobody's making reels about it, but quietly, very quietly, something unusual is happening here. By the end of this video, you're going to understand exactly what that is, and you're going to wonder why nobody's talking about it. Let's go. Now, I'm not going to tell you the name just yet. Here's a clue, though. It moves things across oceans every single day. It's not a courier. Think bigger, much, much bigger. And it's not a port. It's the ship that actually calls at the port. Here's the fun part. The name sounds like it could mean the entire industry. But this is one company. And right now, it is absolutely printing cash. Drop your guess in the comments. I'll reveal it at the end. So what's actually going on with this stock? Revenue just came in at 1,511 crore rupees for the quarter ending March 2026. That's a 24% jump year on year. Now, 24% revenue growth is solid, but it's not jaw-dropping by itself. What's jaw-dropping is what happened below the revenue line. EBITDA, that's basically operating profit, jumped 88%. Not 8.8%, 88%. And net profit nearly tripled. This is not a fluke quarter. This is a business that is firing on every cylinder simultaneously. And the market? Mostly still asleep. Okay, so why should you care? 3 reasons. Number 1, India's trade is booming. Every container, every barrel of crude oil, every ton of iron ore crossing India's waters, this company is right there. And India's trade volumes are at all-time highs. That's not slowing down anytime soon. Number 2, margins are expanding fast. When EBITDA jumps 88% on 24% revenue growth, that tells you the business is becoming more profitable per rupee of revenue. That's a very different story from just, we sold more stuff. Number 3, net profit nearly tripled in 1 year, plus 188% year on year. In 1 year. That is not an incremental improvement. That is a structural shift happening completely under the radar. Now, here's the part most people miss, and this is the most important part of the whole video, so stay with me. The market sees the word shipping and immediately thinks cyclical, volatile, risky, skip it. And they're not wrong that shipping is cyclical in general, but what the market is missing, what it hasn't priced in yet, is that this company has quietly built a fleet of modern, fuel-efficient vessels at exactly the right time. Because globally, older ships are being scrapped, supply is shrinking. Fewer ships on the water means higher freight rates. Higher freight rates mean bigger margins. At the same time, India's trade volume is at an all-time high. More cargo needs to move, more voyages, more earnings per quarter. So you have supply shrinking on one side, demand exploding on the other, and this company sitting right in the middle, with a better fleet than most. That combination is rare, and the market is still pricing it like it's 2020. Let's look at the numbers. Simple version. No spreadsheet required. Revenue, 1,511 crore rupees, up 24% from last year. Solid. EBITDA, 941 crore rupees, up 88%. That's a big jump. Net profit, 1,044 crore rupees, up 188%. That's unusual. EPS, earnings per share, 73.13 rupees in a single quarter, up 188% year on year. Now compare that to March 2025. Net profit was 363 crore rupees. By December 2025, it hit 813 crore rupees. By March 2026, 1,044 crore rupees. In 1 year, 363 crore rupees to 1,044 crore rupees. 3 out of 4 key metrics more than doubled. That's not a good quarter. That's a turning point. So what could actually move this stock from here? Watch 4 things. 1. global freight rates. Any stabilization or uptick sends earnings higher, fast. This is the single biggest lever. 2. Fleet expansion announcements. If management orders new vessels, the market will read that as a confidence signal. Bullish. 3. India's infrastructure push. New ports, energy import corridors, trade agreements, all of it means more cargo on more ships. 4. One more quarter like this one. Right now, the market still calls this company cyclical. One more quarter of these numbers, and that narrative flips to compounding. That re-rating is where the real opportunity sits. Now, I promised you one honest risk. Here it is. Shipping is cyclical. This company is riding a perfect storm right now. Supply disruption globally, India trade surge, and a quality fleet advantage. But if freight rates drop sharply, and they can drop fast in shipping, revenue and profit can reverse almost as quickly as they climbed. That's the real risk. Don't ignore it. Here's the balancing thought, though. At the pace they're generating cash right now, this company is building reserves that could help it absorb a downturn far better than it could a few years ago. So the risk is real, but so is the buffer. Okay, the company is India's largest private shipping company. The name literally sounds like it could be the whole industry. That's probably part of why it flies under the radar. Now, if you had already guessed it, drop it in the comments. I want to see who figured it out from the clues. And if you want the next Under the Radar breakdown, subscribe. I find these before the crowd does. You should be there when I do. I'll see you in the next one.